Good morning and welcome. Picture Radio News Hour, Joe and Jason on this Thursday. I hope it finds you well out there. Man, the year of chaos, and it's another chaotic day today. If you've missed it, Alex Jones, InfoWars, the auction has been completed. They went to a not only a silent auction, but a closed auction. So we don't know how much was paid, but we do know that The Onion has bought InfoWars. The Onion is kind of like the Babylon Bee for the left. So they have secured InfoWars. They are going to shut it down. They plan on relaunching it as a satirical, I guess, polar opposite of Alex Jones. So they'll do a lot of parodies, poking fun at the conspiratorial thinker Alex Jones. I don't know what it means for the broadcast yet. It will continue in some form. It won't continue in the buildings that they're in. I'm sure they'll figure out a way to get it out. It'll essentially turn into a podcast of some sort. But it has been, it is done. It is The Onion as the one that won the bid. Apparently, they got the people from Sandy Hook to take less of the money. That's how they were able to, I guess, outbid everybody else for it. And, of course, it really wasn't about money, because if it was about money, they would have let Alex stay in business, because obviously they were making money there. But they want to silence anybody. Jason, it's one of those things where it gets more and more interesting as we continue to watch this year of chaos play out. Trump continues to appoint people that he wants to be on his cabinet. We'll see. They got to all get appointed and all that. Matt Gaetz, the latest. Not thrilled with that one. I get people kind of, the real Trumpers like it because he's right, I'm going to stick it to the left kind of guy. But yeah, he's a little bit of a creep. Not a little bit. He's a creep. But he's able to avoid the prosecution, because he has resigned from the House. Remember, he was under investigation. But I guess the tit for tat is going to stay in place. The markets really kind of starting to settle down here. Do we have the bottom in gold and silver? Possibly. Do we have the top in the stock market? Also, possibly, and Bitcoin as well, but maybe we'll start focusing in on data. We had data out today. We'll get to it. Producer prices. Remember, yesterday we had consumer prices. Today we had producer prices. We also got an update on the debt. We had jobless claims. And none of them, well, maybe the debt. The debt probably said, please cut rates. Almost an all-time record. Only the 1 year of COVID, the largest budget deficit to start. Got to remember now, the government started its fiscal year in October. And this is the first month of the fiscal year, and it was, as we said, a very, very bad start. Part of the reason why they're talking about how high are rates going to go, because of the overwhelming amount of debt being issued. Sometime tonight or in the early morning, we will cross $36 trillion. Right now, the deficit, $35,998,220 million and counting. And, Jason, it looks like everybody's, okay, now let's see what happens, right? We know the debts are going to be big. How big are they going to be? How many of these appointments get nominated? We found out yesterday that the head of the Senate now, Thune, which was not the guy that Trump wanted, he got the nominee, the nod, and, of course, it was a secret vote. Why is it a secret vote? Shouldn't we know who voted for who? Rick Scott, which was I guess the Trump guy, he finished third out of the three guys. The House, Johnson stays. So again, he and Trump have had a very good relationship, even though we kind of poo-pooed on Johnson when he kind of backed down on everything he said he stood for after he had a meeting. But nonetheless, we'll continue to watch it here. Our toll-free number, 800-951-0592. Really quickly on jobless claims, because that was probably the worst of the data. 217,000. So this is kind of the new number now. 220,000, give or take a couple of thousand in either direction. Continuing claims fell a little bit. So that's the first time continuing claims had fallen, and it's something where obviously still not anywhere close to a number to be concerned about. Like I said, we'd have to be well above 250 a week to get concerned, but that number just seems like, whether it's right or wrong, who knows, but that's the number we've got to use. By the way, Southwest Airlines, I wonder when we crack down on the illegals, what effect is that going to have on the airlines? I wonder how much of this good old stuff was them flying around illegals. I'm just saying, I think it's pretty big. I could be wrong, but Southwest, they're laying off, and then a huge auto parts maker shutting hundreds of locations. We'll tell you who it is when we get back. 800-951-0592, Patriot Radio News Hour. Joe and Jason on this Thursday. A quick look in at the markets. The Dow is down, not a lot, but down 13 points. The S&P is down 6. The Nasdaq's down 33. The 10-year note, 442. It's been as high as 448. We'll continue to watch, obviously, news of the debt for October, a big factor. Crude oil is higher today. Gold is up right now about $1, 25.75 yesterday. So gold was up yesterday on the inflation data, and then, of course, the bond market took off again. Gold fell again this morning and hit there's a big support level at 25.40. Bounced off of that this morning and right now sits at 25.75. Silver's up 70 cents. Silver also bounced off $31, 30.37 on silver. On the currency side, we're watching, the Japanese yen, 156, but no word on the intervention yet. The crypto markets, we got to 93, 94. We could have touched 95. I don't know that we did, but somewhere in that 90, let's call it 93, 94,000 range. Kind of selling off right now, 87.9 on the Trump euphoria trade there. Be careful, watch out. We'll see how all of those things play out. We keep telling you, be diversified, be more diversified, understand what's really playing out here. Check out our friends over at Y-Refi, up to 10.25% fixed rate of return, not correlated to the stock market, not correlated to the Fed, not correlated to any of that other nonsense. They don't charge fees. They don't play games. Got to have a minimum of $50,000. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-Y-REFI-24, 888-973-3924. But, Jason, yesterday we had CPI, which was hotter than expected. Today we had the wholesale side, and much of the same. Now, they'll say, well, it was in line. But in line meant inflation got worse. But wholesale prices, producer prices increased, seasonally adjusted, right? You got to add the salt and the pepper. 2/10 for the month. They're saying matching expectations. Headline wholesale inflation 2.4%, excluding food and energy up 0.3%, and up at 3.1%. And as we know, the Fed's favorite inflation gain 2%. Services up 0.3%. They're saying that the big deal there was, you guessed it, people managing your money, charging you more. That was up 3.6%. Energy helping. You got to remember, a lot of this is getting helped out by energy. And normally in the winter, the fall, winter, that's when you get the cheaper prices. We'll see if that can continue. Probably not, but in any event, that was still, like, they called it in line, but everything was hotter. Just like CPI yesterday. Everything was hotter. Month over month was hotter. The headline number was hotter. The core number was hotter. But somehow, I guess, you know what, Jason? The fact that they got something right made them happy. Oh, look, hey, we said it was going to be that. It actually was this. Yay. So kind of saying, hey, don't worry, the Fed can still cut rates again in December. That narrative has not changed yet.
I think they keep cutting the rates, Joe. I think that's what their plan is. I think they this is the decision they've made, Joe. We'll keep watching it. I think tremendous inflation, not just the inflation we're already dealing with, but a higher level of inflation will be the only thing that will stop them. So Jerome Powell, didn't he say last week they're going to cut rates into next year? Just keep cutting them into next year. 2025 cut rates. I think that's real. He's the most defiant.
Well, the bond market keeps doing what he's doing. He might as well, right?
Right.
He might as well, because it's not doing anything, right? Sure, cut rates, but if the bond market yields keep going higher, it doesn't affect anything, right? The mortgages don't get cheaper. The auto loans don't get cheaper, right? None of those things get cheaper. If the bond market keeps heading higher, you could be right. Advance Auto Parts today, closing 500 in, I think it's 523 locations, shutting 4 warehouses and exiting 200 others. I don't know if those were franchises or what. But Jason, another one of these big closing announcements on the retail side, kind of like Big Lots and the rest, more empty space coming up, but no one really paying attention. And apparently it doesn't affect unemployment or layoffs, because it keeps happening, and yet they keep saying jobless claims are okay.
Well, I mean, jobless claims aren't that high, right, Joe? So, I mean, right. Like you said, they're excited. They're excited they got something right, but we're just going to sit here and watch it. We're going to see markets, I believe, move somewhat in a positive direction until something actually trips. Something's got to trip, and I don't know when that's going to be exactly, because if they start spending money like it looks like they're going to, government's going to have cheap. They love the lower rates. They're going to be able to borrow for less. They may not. They're not going to borrow at the 10 year. They're going to borrow the 1 month. They're going to borrow the 1 year, right, Joe? They're not going to borrow the 10 year. So to get the government some cheap money, so that the new administration could have a whole lot of cheap money, they want to borrow it cheap. So they're going to keep lowering the rates.
Yep. I think you'll see the short end, because I think that's where all the demand will be. You could actually see those rates not fall or not rise, like the 10-year and the other longer term, because nobody really wants to be out that long. According to the U.S. Treasury, we've done it. The government has done it. They spent a record for the month of October, $584.2 billion. I don't know how this is possible. Up 24% from a year ago. Now, I know that maybe there was, the Social Security checks went out on this day versus that day. You could see a little bit of difference, but 24%, just incredible amount of spending. By the way, health spending alone and I've been warning you about this. People don't want to listen. That's the part that frustrates me. What have I been telling you about Medicare and Medicaid? See, the insurance companies, they screwed up. They screwed up, and they made a deal with the government that cost them boatloads of money. They fixed it now. Right? When the contracts come up, no. They raise the cost of all kinds of things. Healthcare spending jumped $62 billion year over year. By the way, defense, right, up 12%. Here's the other side. The government collected, I got to remember now, October is kind of, it's the extension month, right? So people that don't want to pay their taxes in April get an extension. You got to pay them in October. So it's, when we look at the big revenue months for the government, April and October, those are the two big revenue months. So you don't want to have big deficits in April and October. Right? You just don't, because that's when it's supposed to be the best. Well, they collected just under $327 billion. I mean, that just sounds like an incredible amount of money that we give to this government. If you did that every month, right, that's $4 trillion. Right? That's $4 trillion. Of course, April, it's the real big month. But here's the thing. Here's what really made it bad. That was down 19% from last October. And again, part of this is being, when we look at Wall Street, so few stocks are actually contributing that it's starting to show up now in these tax receipts. So we went from over almost $404 billion down to $327 billion. And by the way, in September, right, some of the guys, maybe they did a little early. September, they had a big tax receipt, $527 billion. I think a lot of that probably had to do with all the big guys that they're selling. It's probably Buffett amongst others. They're saying that tax receipts have flatlined and are starting to decrease. By the way, the budget deficit in October would have been even worse, according to the Treasury. They're saying that taking into account that the budget deficit would have been 22% higher, except for they had some weird filing dates and whatnot. So keep that in mind. By the way, the second largest October deficit in the history of the country. And to give you an idea of what we're talking about here, Jason, it came within a whisper of being even higher than what we spent during the COVID emergencies. That was in 2021. It really is mind-blowing. This was a much bigger number, and they were expecting it to be big, but it was much bigger than that, about 15% bigger than what they were estimating. So it's not a good start. No,
and we know they shut the country down and created this. It was all blamed on the boogeyman disease, but it was all baked in. It was all starting to happen in 2019. As far as I'm concerned, this is 2019 all over again. And here in 2019, we didn't. I don't know how much that deficit was in 2019. Obviously, the 2020 that was bigger for that month, but.
Less than $150 billion, by the way. Less than $150 billion in 2019. So 2019, it was about $140 billion. Now we're at, what, $240 billion, right? So that's $100 billion more than before COVID.
My guess is next year will blow away all those numbers for that month. It'll be higher than all those. I don't see how they avoid it, Joe. COVID was the excuse for what is already happening. They had, for those numbers to be as bad as they were, they had the excuse, right? What will be the excuse next year at this time when the number gets bigger? And that's what I keep talking about. What is going to be the emergency? And I think in the next 18 months something's going to happen. They can't sit there and take the blame for how bad economically things are going to get. Trump is going to demand that things get better when he gets in. He's got promises to keep. He's got favors to return. And the only way he can break those promises and not look like the bad guy when things blow up is he's got to be able to point the finger somewhere. The Fed's got to point the finger somewhere. It looks like the Fed and Trump are going to want to point the finger at each other a little bit here. But
right.
If there's a big war or something, it's not our fault. North Korea, A, B, C, D, and Iran, GEF, XYZ, and nothing I can do about it. We got to send money. We got to send soldiers. We got to blow things up, and that'll be it, Joe. And then you're going to see this number next year probably be bigger than the COVID number.
Yeah. And again, an update here on Advance Auto. It's going to be over 700 stores. So these other 200 that I don't know what they were, they're closing as well. So be prepared for that. Here's the other thing. The interest rate was below 4% for most of October and didn't really start running until this. Going to be even worse next month. We're back here, Patriot Radio News Hour, Joe and Jason on this Thursday. And someone has come in and been buying the gold and silver markets here. Now gold's up 6, make it 7 now to $25.80. We got $10 Liberties on sale. And this was on sale I think gold was... That was like $30, almost $35 ago this morning. So jump on this today because it's a great opportunity. $10 Liberties, 1 through 9, $1,375. 10 or more, $1,365. So once again, we're able to have 10s, less than 20s. We love that, 2 10s, less than a 20. And again, I think gold moving higher as people are digesting what's happening in these debt markets. Silver's up 16 cents, almost back to $30.15. Listen, we still got some dimes and quarters. Dimes at $1.20 a roll, quarters at $2.40 a roll. Big opportunity. Take advantage. Make sure you're adding on this dip here. 800-951-0592. And Jason, we're kind of watching these numbers and seeing what happened with the debt numbers. One of the things that was very interesting was the interest rate. Got most of the month with some lower rates, and now they're worried in November and December now that the budget deficits, and again, this one already exceeded what they were hoping for by almost 15, 20% higher than what they were expecting. And they got a break because they at least got part of the month in with interest rates below 3. Of course, now interest rates, bumping up around 4.5%, and most people now expecting it to be considerably higher than that. And then you got to think about, how much can Elon and Vivek really get done? Remember, they don't have any authority other than they're going to highlight stuff. You know what? I like the idea of, hey, let me show you all the ridiculous stuff we spend money on. They're going to have like a thing on X. Hey, look at what the government spent this on and that on, and they're going to be outrageous. I'm just telling Jason and I, we did some of them on the half-empty cup yesterday. We spent money walking dogs and taking their rectal temperature to see if different coats made a difference on the internal temperature of dogs. Guess what? It didn't. It didn't. Just so you know. But these things are all a drop in the bucket, but at least it'll be something. At least somebody will talk about cutting something. I don't know that a whole lot will actually get done because we need really big, important cuts to things. And instead, just so you know, the government today, and you got to, and why do I feel like we're going to get a rash of this as the new administration before they come in? They just approved, and by the way, this was done with both sides. The Republicans were on board. The Democrats were on board. They're going to be giving out more Social Security benefits to people that work for government and have pensions. So usually the rule was, okay, you get a government pension, you don't get Social Security, or you get less Social Security. That has been eliminated. They're now going to increase Social Security benefits for all of these people. About 3 million people will be affected. And, Jason, the big thing here, it's going to add several $100 billion to the debt. On top of that, the CBO came out and said, okay, guys, that just cut another 6 to 9 months of how long Social Security is going to have before it runs out. And again, right, let's just keep spending. These are things that are the biggest problems because there's only 4 places to go. Social Security, which they just made worse. They didn't done. It's worse. Medicare, Medicaid. Did you see the budget number? I've been telling you this was coming. Right? The insurance companies, right? Oh, Joe Biden, I'm going to flex my muscle. Oh, wait, yeah, okay, we gave it to you for, now it's our turn. Huge jumps in cost for Medicare and Medicaid. Defense. You just saw the number. October up 13%. There's no inflation. How can health and human services spending go up 12%? And you tell me inflation's 2%. How does that work? How does that math work? It's ridiculous. Trump going to end these wars? We'll see. I doubt it. I doubt it. Good talk, though. And then last but not least, the interest on the debt. Which, by the way, for the calendar year 2024, it'll be about $1.1 trillion. Next year, boy, here's the problem. I've got to wait. They got to update this because the numbers have gotten worse. I was expecting maybe the 10-year note to be in the mid-3s because the Fed's going to keep cutting rates. If we're talking 10-year notes in the 5s, heaven forbid higher, I hate to say it, is Bank of America right? Were they right? Were they right? What was it? It was 4 or 5 months ago when they said interest on the debt for calendar year 2025 would be $1.6 trillion. You know what? I'll just throw this out there. You tell me. Guess who were the biggest borrowers in the debt market? So companies, and I'm talking about companies. Who is going out there? Because let's face it, right now you'd sit there and go, God, what a terrible time. Why would you go and take a loan right now? Wait a couple weeks. Maybe it'll go back down. Right? And Jay Powell, they're still going to cut in December. Hold off. Maybe the 10-year note will lower. Banks on Tuesday raised the largest amount of debt in a single day going back to 2016. What does that tell you? Where the banks think rates are going? The single biggest day in almost a decade. Yeah. (800-951-0592). Joe and Jason here on this Thursday. $10 Liberty. The special. I should not check my email when I'm doing this show. Just got a big price increase from the wholesalers as gold has bounced off of support at 25.40. Now racing here towards 25.80. But I'm going to honor it. $10 Liberties, $13.75. 10 or more, $13.65. Tomorrow, if the price stays right here, they'll be $14.25, $14.20, $14.25, $14.22.50. So it depends on which way I go. I'll probably round down. That's normally what I normally do. So you're saving a bunch of money here, and it looks like anyway somebody's buying. Obviously, the Russians are buying. I'm wondering if we're going to find out that a bunch of the BRICS and the BRICS invitees dove into the markets today. But $10 Liberties, 1 through 9, $13.75. 10 or more, $13.65. On the silver side, rolls of silver dimes at $120. Rolls of silver quarters at $2.40. Silver, same thing, right? Bounced off its support levels today. We'll see exactly what tomorrow's going to bring. But, Jason, Tuesday, it was the 5th biggest day of borrowing for the whole year. I don't know what made Tuesday so special, right? It wasn't like, some special day or anything like that. But there was a huge amount of companies going to borrow money, and almost all of it, 78% of the borrowing, was done by banks. Selling bonds now because they're worried that the rates are going to be significantly higher if they wait. And I think what we're going to see, remember, gold rallied when the 10-year note went from like 3.6 to 4.4. It rallied. Now, we had a correction here. Mostly, I'll credit it to the Trump thing, probably, right? That would be my best guess. Plus, let's face it, it's been a huge year. We needed a sell. We got it. I think you're going to see gold rally again with rates going higher. Because it's not going higher for the right reason. Look at the Fed is lowering rates. The rates are supposed to be going down. This is the worst scenario. Jay Powell brushed it off last week. It's just market movements. Well, the market is still moving. And if the banks are to be believed, I mean, who has a better idea of where rates are going to be than the guys that actually do the Treasury auctions, right? I mean, they've got to be the best ones at it. Why are they issuing all of this debt right now? Because, or you think they're issuing it now because they think that the 10-year note's going to be 3.5 in 3 months? Right? You think they're doing it now because they think that next year the 10-year note's going to be, 4% or less? No, if they thought that, they would wait. They're not waiting. And it's really the amounts. Right? I mean, because let's face it, some of them may have, hey, we need some capital. That could be. But they wouldn't borrow like this. right? They're making conscious decisions that we better borrow it now because it's going to cost us more to borrow it later. I mean, that's what's happening here. And when we look at, I know October's only 1 month, but we start off the fiscal year, I mean, this thing's a record plus tax outside of, COVID, which it almost took that out. This is what we're up against. And like I said, let's see what happened today. Social Security, boom. We just went and spent more. Now, the problem is the CBO said 6 to 9 months. When was the last time they've been accurate? I mean, does this thing chop a year off? Year and a half off? I don't know. I hope it's only 6 months. That'd be great. I mean, why would that be great? That's terrible. But the spending just continues. And look at the tax revenue. I know, but Joe, the stock's hit an all-time high, right? Yay! But they were already pretty high. And tax revenues fell like almost 20%. Listen, 2020, fiscal year 2024, that was about as good as it could get because the tax revenue got way better than I thought. We should have, listen, without the big tax revenue in Wall Street, we would have had a deficit of well over $2.5 trillion. Right now, I hope you're getting ready. I'm doing all I can to lay it out for you. Patriot Radio News Hour, final segment coming up. Final segment here, Patriot Radio News Hour. Joe and Jason wrapping up this Thursday. $10 liberties. It was going to be a good deal an hour ago. Well, a really good deal an hour and a half ago. Now it's a great deal. Gold's up almost $40 now. It actually is up over $40 from the lows of today. $10 liberties, 1 through 9, $13.75. 10 or more, $13.65. 210s, less than a 20. We love it that there. Silver higher as well today. And again, rolls of silver dimes, 50 silver dimes at 120, 40 silver quarters at 240. So twice the amount of silver, right? The dime's $5 face value. The quarter's $10 face value. So doubled the price there at 240 at 800 951 0592. The Dow's down about 100 points right now, but the big news today, we had PPI out in line but hotter. Jobless claims kind of boring, right? Nobody's really, people aren't lining up at the unemployment line. On top of that, we had a blowout in government debt. And who was it? Was it Franklin Templeton that warned yesterday that they said, and I forget the exact word they used, something like a debt avalanche was coming. So maybe they knew something that the rest of us didn't because October much higher than anticipated. And then now they're worried, Jason, these interest rates. Got to remember, we're up almost, not quite a whole point from when the Fed was getting ready to cut 50 basis points. The 10-year note was at 3.6. We almost got to 4.5 today. That equates, at 1 point, adds like $200 billion to the debt. I mean, it's a big problem. And, of course, sometime tonight we're going to break $36 trillion. And by the time Donald Trump gets inaugurated, we're probably going to be staring down $37 trillion.
And then it just keeps on going, right? It almost doubles over every 8 years. It's just doubling every 10 years. So, let's say it's $37 trillion. I mean, in 4 years, you're going to get another, what? 18, 19 trillion at the end of his 4 years of 2028. What 56? We have $56 trillion. Can you imagine that?
I hope that doesn't happen. Because that has been the trend, right? That has been the trend. That would mean that we would average over the 4 years about $4 trillion. So that would be a doubling of the debt annually doubling the debt. Because if you did that, that would add like 16 trillion. 4.5 trillion would get you pretty close, to 36 trillion, to almost 18 trillion, which would be about half of of the debt right now, that 37 trillion. And that has been the trend going back to Obama. That has been the trend. That would be, wow. That's a lot. That is an avalanche of debt. Yeah, get that goal put away. We're not kidding. I know you're still in celebration mode. Be in I want to protect my money mode. We're going to be back with the half-empty cup, and the best realtor on the Front Range is going to be with